All right, so we're going to be going over how you can make trades and how you can determine if you want to buy a company. And I am a day trader, so most of this stuff's going to be about day trading. And I am read technical analysis. And technical analysis, the definition of that is basically reading the chart and playing the chart. And some people who are swing traders, which reminds me, I'm going to get into the three types of traders right now. So one, we have actually no, there's four. So one, we have a day trader. Day traders usually trade during the day, and by the time the market closes, they don't have any more. Like they usually are out of all their positions. They don't hold anything overnight. Sometimes they might buy the morning if they expect it to go up the whole day, and they sell at the end. Like say someone shorts right here. Or no, that's I don't want to tell you guys about shorts yet. But say someone buys in the morning and then they sell at night. Before the market closes. So that would be an example of a day trader. A swing trader is someone who holds overnight or even longer. So say someone buys in at 685 right here, this line right here, this is 685, and they want to hold it for a week straight. Let me get this line. That would be an example of a swing trader. And they buy it at 685 and they don't sell it even though it comes back down their price, but it keeps going up, 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 and then they say they decide to sell it like a week later, $8. That is a swing trader. Swing traders can be very rewarded. So because say they buy it here and sell like 10 days later, the price is up here. But say you're a day trader and you buy it here, you can sell right here. And obviously this gain is less than what you could have made if you bought right here or right here. But some people are impatient and they like being green right away. That's why people are day traders. So next thing we got is investor, and you know what an investor is. Someone who invests usually holds a company for like a year or more. So people will buy Facebook and literally hold it for like years. So say you bought it back in 2019 at 123. Now it's already all the way at 384. So you could have made $200 per share if you bought it at 123. That's an investor because they usually hold like more, I would say more than 6 months. Swing trader is probably like 5 months or less. It all depends on preference. There's really no certain definition, but that is a investor. And lastly, we got a scalper, and scalp is a very very tiny profit. So say we go to the 1 minute of Nvidia. So a scalper would buy here at 244.38 and sell 240.55, like $1 more. And they usually do this very quickly. This is in a time span of 20 minutes, but some scalpers literally just are in place for like 5 minutes. So say somebody got in here at 254.38 and then they sold at 255. That is literally that is a 5 minute play. So people are scalpers. And you can be multiple, like you can swing trade some stuff and you can day trade and you can scalp some stuff. I usually scalp and day trade. I mostly scalp stuff with options. I'll be going over that in a way later video about what options are, but that is what scalpers do. So scalpers like to take profits very quickly. Day traders usually wait like a couple hours to take profits. Swing traders usually hold like a couple, like overnight to like 3 or 4 months. Maybe they're expecting like a new, like swing traders are usually expecting some type of really good news. So say stocks really bottomed out. So if you go to like a bottomed out stock, DPW, and we look at the daily, see how this is really like trading inside a range right now. Basically this means like people swing trade this. So say they're expecting FDA approval for something. As soon as we get the news, it could shoot right up to 4. So people might load up here because it's not that risky because it really doesn't go below a certain price. So say people load up here and all of a sudden 2 months later we get news and it just pops like 200%. That's when swing traders sell. So that is a swing trader. There's benefits to all of them. Let me know if you guys have any questions about any four of these different types of traders and I'll be sure to answer them. But hopefully this helped you guys determine what type of trader you want to be. So that's that. And now let's go to what I was talking about earlier. So we're going to be talking about trend lines. So if you know what a candle looks like, so you guys know how a candle works because I showed you guys in the last video. So basically a trend line is, I'm going to go to the line chart because it'll be a little easier to see. A trend line is a line that a price keeps bouncing off of. And if you guys look at this chart, see how it bounces off here, bounces off here, bounces off here, bounces off here. it's literally in a perfect trend line. So say we do not have any of this, we can't see any of this, and say we're like right here. Basically, if we make a trend line from here to here and we can't see any of this, we can see that this bounces off here, and we make the trend line after it bounces off here, because that will tell us what it might do in the future. So it bounces off here, and then we can try to predict what is going to happen to the stock based on this first bounce. So if we draw a trend line, it gets near, it bounces, it doesn't perfectly bounce, and then it gets near again, and it almost perfectly bounces from the same trend line and then goes back up. So that would have been a good entry. And obviously we drew the trend line from these 2 points, so we didn't even know what was going to happen up here. So some people will buy after they bounce off this trend line. I love drawing trend lines. If we look at another stock like Spies Daily, this is in like a trend line. See how this trend line is up. So say we want to draw it from here. And then like some people will go short if it cuts through the trend line. You can also, going short will be talked about in another episode. I don't short stuff, but basically shorting is the opposite of buying. And when you short, you get gains if the stock goes down. So hopefully that makes sense. Let's look for another stock with a trend line. Maybe try Tesla. Okay, so Tesla's in a nice trend line. So do you guys see it? This is the trend line. So you could have made it with this point and this point, and then when it got to this point, you could have bought in and expected to bounce off this trend line. So that's just a simple example of a trend line. As we can see, it actually extend. That's not a really good example, but I don't really have, I don't have any of these charts planned. I can literally just go on a chart and you see trend lines all the time. So here's another trend line right here, and see how it breaks through this. See how it breaks under the trend line right here? That means people will go short, and that's why I like trend lines, because if they fall under, you can go short for easy profit. So let's go back to the candlestick chart. You can't, I'm even though I'm experienced, I still use line charts sometimes because they're very simple and I really like simplicity. So let's go back to the candle chart, and we can see with candles, if we go to let's see, Etsy. So if we go to our trend line right here, see how this is on a trend line right here? If this snaps in place. So look, bounce, 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 bounce. So you could have drawn the trend line based on these 2 bounces right here. And then the third time it goes, you could have gone long at 164, and then it bounces, goes all the way up to 207. That's a 50 share. That's a 50 cent, or my God, that is a $50 gain per share. So I really like trend lines, and they're very, 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 very easy to pick out. Trend lines are very important. I really like drawing trend lines, as I already said before. So make sure you guys are looking for stocks. I'll try to find one other example, maybe. Disney, Nike. Let's talk about a trend line that can be over the top real quick. They don't always have to be bounces off. They can actually be short trend lines. So right here. So see how this creates a trend line down. See how it rejects. See how it bounces, rejects, bounces, rejects, bounces, rejects. So say the third time it bounces down from this trend line, you can go short. And going short is basically means if the stock goes down, you gain money. So if you went short off this third rejection, that would have been a nice entry and you would have gotten a lot of money there. So you can use trend lines in both ways. Again, we see a trend break right here. So this is like a decent trend line. This is really sloppy. This is not an example, but as soon as it closes below this line, it keeps going down further. So that's another reason why I like trend lines. So that is a trend line. Hope you guys learned something. Next video, we're going to be going over support and resistance. One of the most important things you definitely want to know in trading, and that's what I use every day. So hope you guys enjoyed. Remember, tell your friends if you guys have any new friends who want to get into trading and or don't know what they're doing. like and subscribe, share this video, turn on notifications, all that jazz, and have a good night. Thanks for watching. Bye.